Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. mid-session brief. Today, we're talking about the BoE fallout, but honestly, I'm not even sure we're going to get to the Bank of England. We've got huge moves going on all over the markets. Let's get right out to price action. Probably where many of you would like to begin is with Bitcoin. I have to say that long-term Bitcoin bulls are being tested. This is one of the days that I'm very, very happy that I'm an active trader, that I get to dodge in and out of the markets, that I don't have to sit around and watch these charts go just to absolute hell. You're watching Bitcoin extend its losses. We talked a lot about what could happen on a 12-month time frame. And now, listen, a lot of people are going to talk to you, if you haven't already been talked to, by everything from salesmen to investment people to fund managers. I'll give you an anecdote here in a second that was hilarious. Honestly, I had to get the tears out of my eyes. I was laughing so hard because the nonsense flying around the financial world right now is unbelievable. Everybody's an expert. Everybody believes that they know what's going on. And I was listening to some of the experts, supposedly the smartest guys in the room, try to explain last silver sell-off, and I started laughing. I was laughing so hard I had to get eye drops and dry the tears from my eyes. What I've heard is absolute BS. And right now in Bitcoin, I'm hearing similar BS fly out. Oh, well, the institutions are just covering their short positions, and they've got to unload some Bitcoin now to cover the short-term liabilities, and they're going to come back with a vengeance. And I go, yeah, maybe they do, maybe they don't. Now, the beauty of this for us is we're active traders. We just trade it. If it has a pulse, we can trade it. If it bleeds, we can kill it. I mean, that needs to be our mentality. Right now, Bitcoin is trending, and it's trending south. You say, Shane, but the long-term trend, and I go, well, take a look at what's happening now. Right there, compression back in 22, 23, break, 24. There's your euphoric highs up around 126. We had a pretty good call. We thought that 125 was going to be an area that we tested, but I didn't think it was going to be the top of this thing. We have to start thinking that now it may be the top of this thing. Now, I've seen everybody that's invested in the crypto sphere at an institution level come out and pump crypto. And I've watched it all week long. People going, oh, Bitcoin's going to 7.5 million. That was the new target. I started laughing. I said, well, maybe it does. Maybe it does. I don't know. But right now, it's getting absolutely crushed. And as traders, we're always thinking in the right now. We know what we're going to do a bit later, but we've got to be thinking about what's happening right now. Here's what's happened in Bitcoin from a technical perspective. Number one, you had a negative year last year. That left a bad taste in a lot of people's mouth. It started last November. We saw the real pressure that came across the board to the bear. This year is starting out extremely negative for Bitcoin again. No question about it. You're down about 24%. Now, the key things that developed here with regards to price action, I get a lot of people, Shane, just talk price action. I don't like fundamentals, but you have to understand that it all fits together. It's all woven into a tapestry or a sweater or a rug. It's all the same. And right now, your dynamic in this market is that you had a negative close to 2025. In 2026, we've broken beneath that yearly low, and we've taken out that 50% level right at 70,000. We talked a lot about that. We said if 70 goes, look out below. Right now, I'm looking at 62% of the past, 4-year trading range, and it's down the right around 57.8. So if you're at 57.8 and you're on the sidelines and you're looking for a bid, that's probably your bid. That's probably an institution bid. However, we've also got contingency plans. Be ready for anything, like the old Boy Scout credo, ready for anything, prepared for anything. As active traders, we need to be prepared for anything. Yesterday, I talked about being ready to trade flat markets, being ready to trade trending markets, what all of that means and how it builds yourself into an edge, into the financial athlete that you really need to be to succeed in this for a long period of time. Right now, if we're thinking Bitcoin, we're thinking, man, the bear's got it. Short time frames, I've got to be looking to the short side of this market now. Long term, if I'm a hodler, if I'm a buy and hold person, 57,000 is probably going to be a pretty good trade down there. I have no problem stepping up and buying that, looking for maybe a $4,000, $5,000, $6,000 bounce. No problem with that. Think about what that game plan is. If I'm looking for a $5,700 bounce off of 57,000, what is that? That's a 10% bump. We could get something like that in just a few hours. We really could. I'm watching that level big, 57.8. Now, the next thing is our panic plan, our contingency plan. What if this thing really does? What if the world really is ending for Bitcoin? I don't believe that. The Trump administration is going to go down with the crypto ship. That's the bottom line. But what could we say? 39? Is 39 crazy talk? No, it's not. What's the best buy on the board? Obviously 39 because we're trading 66 now. So the folks that are thinking about buying Bitcoin right now are right. I mean, they're in there with just guns blazing at 39,000. What makes 39 better though? Truly better. Of course, it's cheaper. We all get that. What makes it better? 78% retracement's the line in the sand. If 39 or 40 doesn't hold, you're going back down to 15. And then the last 3 years have been wiped out. I think it can happen. I don't know that it will, but it can. Don't kid yourself. It can all happen. So you've got the 13-month EMA right there, which is incredibly important to me. We haven't traded beneath that EMA, I don't think, ever. And right now, excuse me, that's a 13, yeah, it's a 13-month or a 13 period, and it's just now showing up. So this is on a yearly chart, a 13-year EMA. That's how rarely I look at yearly charts. 189. 13-year EMA, 39.3. If we get a shot at 39, back up the Brinks truck, I'm gonna be selling my ball caps, trying to buy some Bitcoin from there. I'm not that excited about it right now, though, to the long side. I'm really not. I think that longs are getting destroyed. Retail longs are getting destroyed. They're getting absolutely crippled in silver. I'm going to pull a silver chart here in a minute. We've got a pretty good trade going on in the Great Britain Pound USD, though, we put out a little while ago. It's performing pretty well. I think we did pretty well on that one. Gold's just sort of stagnant right now. Dollar yen, we're going to look at a $9.20 yen. I've also got my 9 EMA strategy up and running on short time frames. I'm looking at US Tech right now in that MT5 platform. We may look at that in a second. I don't want to get too sidetracked into systems trading, though, because I know a lot of times it just bores everybody. You guys want to hear a lot of different things. So I'm not really going to sit here and trade the 9 EMA all day again. We may just evolve into trading sessions where we start at 9 a.m. my time or 7 a.m. and trade all morning and see how much money we can make. We may do that. Personally, it's been another decent trading day for me. Sort of flat, though. Not really pleased about what's happening in WTI crude. Price action is developing during the overnight and bouncing around. We'll cover all that here in just a second. So we've got a packed up lineup for you. That was the first 5 minutes. I wanted to get right out to price action. We've got a lot to go over today. We've got a preview NFP for tomorrow. I'm going to show you where to find some of our materials on the Switch Markets website. And then also I want to show the Switch Markets YouTube channel. A lot of you, I get questions. Shane, where do I find the videos? Where do I find the market analysis and things? I'm going to go ahead and show you where to find that too today. If you have any questions at all, any markets that you'd like to look at, I will be more than happy to at least work through a few. Well, we got a full house out there on YouTube land, so good to see everybody back in the room. Yusuf, good to see you. Good. Drawing, how you doing? Drawing, yes, sir. Hey, what's up, yes, sir? How you doing? T. Marina, hello, T. All is well. I'm confident all is well out there. Jason Maxson, hey, Shane, hey, Jason, how are you? I'm doing very well here. Interesting 24 hours, sort of dealing with some, I wouldn't call them personal issues, but I'm dealing with some interesting times here in Montana. I might give a little talk about trader psychology towards the end of the stream. A lot of folks really like some trading tips, but we'll talk about what maybe, if we have time, what it is when your psyche's a little bit compromised and you have trouble seeing things the way you need to see them to compete. And we'll talk about that maybe if I remember, but that's sort of a long talk. It might be better that we do that tomorrow sometime. Tina, good to see you. Tina Jing, welcome. Always welcome, Tina. Good to see you. Paka, good to see you, Paka. Hey, Shane, the big dump. Oh, boy, there's some big dumps on the board, and one of them is in silver. We're going to go to that one next because we do have some key levels that we do need to outline. But I wanted to start with Bitcoin. Even Shiba Inu is getting down into my kill zone. It's going to be interesting. It's going to be an interesting spring, guys. Gordon Williams, good to see you. Gordon, what is the minimum to trade on Switch Markets? Man, I think they open accounts for like $50, Gordon, or 50 pounds. I believe it's very low. I know that. So if you want to cut that leverage way down, I recommend that. Starting very, very small and then leveraging up. Full disclosure, I've been trading pretty good leverages this week on the futures market. Not stupid YouTube leverage like you hear from everybody, but I'm trading legitimate block and tackle. Here's the lunch box. Here's the hard hat. Let's get in the market and see if we can hack out our 20 ticks or 25 ticks a day. That's what my approach has been. So it takes more money to do that. But if you're starting with $50, do it. There's nothing wrong with that. Absolutely nothing wrong. I believe that's the minimum. Double check with Switch Market support. Okay, guys. Everybody over in the How to Trade community, always a pleasure, guys. Ralph, good to see you. Ralph Tuku, good to see you, Tuku. Welcome, Lita. Bobby Bob, hi, Coach. Today's technicals worked for me. Yesterday's was a dark day for me. Thank you for sacrificing yourself Monday to Friday to show the way, especially on the psychology. So, yeah, I mean, yeah, absolutely. The support. Thank you for your support. Absolutely. I do my best. You know, if you guys need to vent, send me a private message and just air it out. Sometimes it helps to air it out. I like listening to traders. I don't like hearing about you guys losing, but it's part of the game. So we did our best yesterday on Edge. We'll talk a little bit about the psychology later today if it's a good day for it. If you guys are struggling a little bit, just let me know. We can talk some psychology. Ask any questions you'd like. That's what these live streams are for. I have a certain amount of things I want to cover, but you're always more than welcome to ask anything you like. A couple of rules on this stream. If it makes money, it's the right answer. That's number one. Number two, there's no BS here. I'm not going to BS you. I'm not going to sit here and talk about something I don't know about. I know about trading. I've been doing it for a while. The psychology is the toughest part. The strategies, you guys can all build a strategy. The psychology, the discipline, you know, that's what's tough. Knowing when to pour on the leverage and when to pull it back, that stuff's all very difficult. But if you can master it, you can be very, very good. You can be very, very good. And this is a profession you can get good at. And it's something that nobody really understands. Nobody's going to understand how you're making your money, and nobody's going to understand it, but they don't have to. It's for you to understand. It's for you to understand and for you to embrace and really just get into it and go for it. Andrea Garwell, good to see you. Andrea, welcome. All right, everybody, let me see. What are we looking at? Gold ahead of U.S. NFP. We're going to talk NFP, yes, sir, probably in about 10 minutes or so. I'm going to pull gold. I want to start with silver, though, so here we go. Silver, absolutely crazy volatility every single day. I want to start with this monthly chart because this is what we pulled for our weekly market picks. I want to show you where to get that right now over Switch Markets on YouTube. Very small channel, a lonely channel, you could say. But if you want to pop by and maybe comment on some of the videos, go ahead. You just go right there to Switch Markets Featured. You're going to get our daily live streams. We're live there right now. And also our market analysis. On this market analysis comes out every Tuesday for the UK session. Gold, silver, Bitcoin, Ethereum. I covered it all. We had some pretty good levels in there. And it was a good call to step back to the long-term support levels that we are looking at for silver. I'm going to pull those in a minute. We also got a bunch of shorts where I'm making faces and whatnot. So go ahead, check that resource out if you want. Right here is what we've got for silver. Now, this is what I outlined in the video. I talked about support. 75 clearly is huge. 75 is huge right now for silver. There's no question about it. None. No question. So a good portion of what I've always done as a trader is I've always tried to keep my ear to the ground. You know, that's the old saying, you know, out here, the Native Americans out west, the way that they could hear if somebody was around or coming, they put their ear to the ground and they could hear the horses, right? They could hear them even over the bend and things. The biggest thing I always do is I've got my ear to the ground. Railroads, too. If they want to know when the train was coming, they would listen to the railroad, and they could hear it miles and miles off, the vibration. So I'm always listening. I'm always listening to a lot of different media sources. I've been asked a lot. Listen, I'm looking at CNBC. I'm looking at Bloomberg. I'm looking at Fox Business. I'm listening to all sorts of podcasts, everything from Joe Rogan. I'll even tune into InfoWars sometimes. I'll listen to the conspiracy theorists. I'll watch YouTube content providers to try to get a lay of the land of what people are thinking. Now, the brokers themselves all put materials out. I don't listen to many of those because I don't want anybody talking price in my ear and influencing what I think. However, I had to tune into the financial world on Friday, and some of the biggest silver brokers in this country were going on and on and on about trying to explain what happened on Friday, the 30% dive. Well, it was the short sellers are coming in. Oh, well, the physical silver, those folks are getting squeezed out of their short position, so they had to cover, and that caused a major sell-off, and yada, 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 yada. The bottom line is nobody knows what happened last Friday. We know that people got pushed out of the market. We knew there was liquidations, so there was probably some profit taking up there above 100. There was probably some shorts getting squeezed out, stopping themselves out. Okay, that all generates selling. But the other end of the picture, the other thing that did happen that day was the momentum algorithms got involved. And when the market starts spinning like that, when it starts spinning, the volatility's there, the movement's there, it's hot and heavy. What's happening? The algos are in there. The high-frequency traders are in there. All this stuff is legal. All the high-frequency trading, they were going to ban it for a while. They haven't done anything. The money's coming into the silver market. It's coming out of dark pools, which conceal the origins. They're using iceberg orders, showing more sells, more bidders, and then pulling those orders. They're spoofing. They're doing all of it. Everything you can imagine to manipulate a market was being done on Friday. And the end result was what? It was a 30% crash. And I'm not laughing at you if you got caught long. It was a bona fide mess. We covered it. It was a catastrophe. Okay, fast forward to today. What's happening today? We're off 14.25% in silver. Are those algos involved today? 100%. Is the institutional selling there? I don't believe so. Not much of it. This is, at least for the short term, the new normal for silver. Now, what I'm not going to do is I'm not going to come in here and say, you've got to hold your position. I heard every silver broker in the country trying to talk their clients out of selling. Because when you liquidate, that means that they've got to do a bunch of paperwork, and it manipulates their holdings and their bottom line, and they don't want anybody selling. They want everybody to hold firm. Well, hey, listen. If you bought silver at $28 or $30 and that sucker went up to 121 and then pulled back to 70 or 68 or 70 and then bounced back up to 75 or 80, I would be considering taking the money just because the ride is too wild and there's no rules on how low this thing can go before you eventually go back up. Now, there's been rumors of a price floor being installed here in the United States for silver. J.D. Vance gave a speech on it the other day talking about an agreement between producers so that United States businesses can always have access to rare earth minerals. It's all BS. These things will be honored for a while, and then they will be exited in a seemly or not so seemly manner. That did roil the markets. That's not the reason for the pullback. That's not the reason for the pullback. It's also not a reason where you can sit here and make a long-term investment decision based on the government maybe putting a floor in on silver prices. It's not true. Why? Because governments change. Okay, maybe Trump and Vance do put that in. And then when the next administration's in, maybe they do bring that out. You can't do that. What you've got to do is say, okay, long-term, do we like it to the bullish side? Of course. I like silver to go up in price. Do I like it to go up from 75? How high does it have to go from 75 for me to make enough money to make my risk worth it? And with a thing like silver, you're not really risking your money. You're always going to have something to cash in and pay your rent or pay your car payments or whatever. But how long does it take to get your money? Case in point, that's why we do our levels. We want to get the best bid that we can. We want to get the best price that we can. We want to be better than the guy that just calls up on the phone and says, give me a bunch of silver. We've got a pretty good game plan here. Today, you're off 14%. You came right down to about $75 and you bounced. Now you're rotating right there. In the scheme of things, on a monthly basis, you haven't really done anything. We haven't really done anything with regards to making challenging this trend. Sure, we're down to 50%. 62% probably is where the rubber is going to hit the road. So 75, we're seeing good compression. It's hard not to be bearish at this point. Clearly, there's sellers involved, and clearly they are selling a lot. So something right around $63, $64 feels to me like a pretty good bid. Is it worth holding out? To me, why not? Are we going to miss the rocket ship back up? Maybe. Maybe. If you wait, maybe. But if you're right, then you have just an incredibly high probability of being successful. So what does that entail? Well, that's about another $12, $11 or $12 off of the price. And we can go ahead. What does that boil down to? Say 75. 11 divided by 75. Anybody? Got to get my calculator out for that. About 15%. I was pretty close. 15%. That's what I was thinking. I didn't say it. Point being is this. Let's be patient. Let's wait. Let's wait and see what happens in silver. Now, everybody pretty much wants to know, okay, what do I do during the day? Look at this. Look at this garbage. This is garbage. Yesterday, what happened at 6 o'clock p.m. at night my time, 8 p.m. Eastern? Tokyo Open. Tokyo Open. As soon as they opened a trade there, boom. Big time sell-off. Happened fast. What have we done since then? Not a damn thing. Retraced a little bit. Now we're coming down and we're just bouncing repeatedly off of that key level, which is 75. So if you wanted to scalp probably the rest of today, you could probably bid 75s, just above 75s, and make a little bit of money, a few bucks there. But as far as getting the game going in your direction to pick a position, you don't necessarily want to do that from here. Big picture's this. Let's get a daily going. See how tumultuous and chaotic this has been. I mean, this is absolute chaos. That right there was chaos. The 30th of January, a day that will live in infamy for silver bulls. So what happened here? Compression. Nobody saw that coming. Boom. Sold off. Bounced off a 75. Hell of a retracement right there. 3-day retracement back up to 92. Bam. Crashed again. This is bearish. There's no two ways about it. If you want to buy and hold 75s, go for it, but just stop yourself out. The next port of call, more than likely, is going to be our 62% retracement, which is right down there around 64, 63, 64. I'm watching that closely. As far as an intraday trade, with this kind of volatility, I would steer clear of this. I would wash my hands of this. If you wanted to make maybe a 4-hour trade, once again, is it really worth the stretch? Maybe a sell up there right around 79.25. You could probably do that. Something like that. Is it worth maybe looking at another strategy? We've got the dollar yen right there, 4-hour chart, absolutely beautiful. Let's go to silver on a 4-hour. What's happened? There was your sell 29th of January. It caught the move. Do we have any reason to think that we're going to rebound on this 920? Not yet. Deep into oversold territory here on the 4-hour. Still, though, let's take a 30-minute. What's happening? Nothing. Man, you got another sell right there. Boom. Predicted the move. Now what? You haven't crossed over yet. Be very careful going long silver and holding it. I don't know who's in there selling it. Anybody that says that they do is lying to you. But it's bearish. If you get a crossover, maybe a bullish cross right around 75, 30-minute time frame, preferably the 4-hour. But if you get something like that, then maybe you can have an opportunity to bid silver with a little bit of aggression, ruthless aggression, something like that. All right, everybody, remember that if you want to trade any of these assets or ideas that we talk about, head on over to Switch Markets. They've got you covered. They have adjusted the leverage on silver. Leverage on silver went from, I believe, 0.2% to about 2%. That's not atypical. I've been getting margin notices all week long from my brokers, especially with regards to metal. So remember, you've got all sorts of things. You go right here to your commodities. You've got gold. You've got silver. You've got oil. You've got everything you really need to trade. Thousands of markets. You're going to want to move up to MT5, though. I got a lot of questions about MT4. MT5 is probably going to be your preferred platform here with Switch, just because you're in a situation where MT5 is going to give you all the markets, thousands of markets. And listen, they've got a bunch of testimonials there you can check out too. This is the tool, though. It's right behind my picture. You're going to go ahead and give that a click. You're going to go right here to what? The resources. I've been showing you guys this every single live stream because it's important. If you don't know how to figure your risk in the live market and you're a little bit sloppy with your money management, the Risk Management EA, download it. Get it going. Believe it. Buy into what it tries to do for you. It lets you define your position size. It lets you align your stop loss according to your position and your capital and your risk allocation per trade. That's huge. That's absolutely huge. So you're definitely going to want to check that out. I've been pointing this out pretty much every day because I don't want to see you guys take some serious financial damage. And I'll tell you what, I've heard some horror stories here over the last several weeks about folks that just really didn't know what they were doing with the leverage, and especially as it pertains to metals. Millions and billions of dollars are being made right now. They're also being lost. And one of the games that the markets will play with you is that you don't necessarily ever get a defined answer if you're right or wrong. What happens to a majority of traders is they get shaken out of their positions before they get good. And I told you yesterday, 95% of the people walk away from this game. Well, 95% of the people quit. Why do they quit? Negative reinforcement via losing money. So out of those 95% that lose money, how do they lose money most? What do? They fight trends. They over-leverage and chase trades. And then the last one is what? They trade at the wrong time. Right now, is this the right time to be trying to trade the metals? With limited risk, yes. There's a lot of money in it. But it's for professionals only right now. You can lose really a lot of money in a hurry. I don't want anybody to do that. I don't want that to happen to you. So be careful. Be careful out there. It's very, very dangerous right now in the metals markets. There's no question about it. Let me see. We're looking at gold. Yeah, we're going to go to gold next. Actually, I'm going to look at the BoE. We got to talk a little bit about the BoE, the Bank of England. What they did today was important. We got a couple trade updates too as well. But yeah, we will talk gold here in just a second. I sure appreciate it. I forgot all about it. Let me see. Eyes. Hey, Shane, I just got an email from my broker letting me know they are capping leverage to 250 max every Friday. 1 hour to market close. $250,000 or $250? That's fantastic. Capping leverage, 1 hour to market close on Friday. That's brilliant. That's a great safeguard. That way I don't have to sit here and yell at everybody not to take positions open home over the weekend on a Friday. That's good. That's good. I think that's a fantastic thing, guys. All right, here we go. Great Britain Pound USD. So we've got plummets following the Bank of England decision. I've had this trade sort of down. I've had it in the queue and rolling. But basically, this was a market order. We put this out a few hours ago. It was a market order from right around 135.44, which was our weekly support. I covered this as well in the weekly, the hot picks, the switch on hot picks. So I covered this level too, and this is a pretty good one. So right there, you've got your weekly support zone. The BoE sort of spoke up in a big way. They stepped up to the plate, and they said, listen, what are we going to do? We're going to hold interest rates static at 3.75, but the real thing here was the vote. The BoE MPC vote cut. 4 voted for the vote cut. 5 voted to hold rates unchanged, and nobody voted for a rate hike. That means you got a pretty good split. And the idea was that, we're starting to head dovish, and it was surprisingly dovish. We were looking for a 7-2 vote there. We got a 4-5 vote. That's very close. That's a split decision on anybody's scorecard. So the idea that we're hawkish or dovish, definitely going dovish. Definitely going dovish. So when we're looking at something like the BoE, a lot of times the devil's in the details. It's not just what they did with interest rates. It's about the feeling in that room. It's about, okay, I want to cut. Well, I want to hike. Well, I want to hold it steady. Well, nobody wanted to raise interest rates. So essentially they believe they're sort of out of the explosive inflationary woods, which is great. That's great news in one respect. In the other respect, now you've got dissent in that room. We believe probably going into the next meeting, you're going to get a 1/4 point rate cut. That's already being priced into the market today, at least against the U.S. dollar. Great Britain Pound USD is off about 0.75%, 0.7 or 0.75. Big move. Brought in this weekly support zone. I had this outlined. Honestly, the trade's pretty much already over, but I wanted to hit a secondary entry on this one because it's not the worst play in the world. Right now, we're printing about 135.45, and the bid was right around 135.44. I got filled. You can see I'm down a few bucks, but I got filled up there at 48 just because I wanted to show a market order. I wanted to get that market order in and get this trade going. More than likely, this will end up being a swing trade. Not really looking for a tremendous amount of money, 35, 50 pips, something like that. Check out our trade ideas for more information. But I want to take you right down to a 30-minute time frame and show you how this level really behaved. So what do you think happened right there? It's probably your BoE decision, right? Now this is beautiful stuff, and this is really a textbook way that I would be for NFP tomorrow. This is how I'm looking to trade it. I love it when it's trading right up here before the news comes out. We're at 136.15. Our kill zone was down here at about 135.45-ish. That's fantastic stuff. That means we're off the lead lap a little bit. We're not compressed right at our zone, and we're not trading there. We're not really debating whether we're going to go up or down. The idea is that, okay, we've got our limit orders in. Boom, there's the news bang, and there's your retracement, and that's beautiful. You're in, you're out. You're in and you're out. And 135.95, I mean, you're in, you're out. What, 40 pips, 50 pips? That's a beautiful trade right there. That is exactly how I would look to capitalize on something like that. Now, the trade that we put out there is because I still like the level. I've been an outspoken critic of the U.S. dollar. Right now, the dollar is it's up 0.15%. The DXY is the dollar index across that basket of majors. You're up about 0.15%, and the reason why you're up is what? It's the Bank of England. The Bank of England crashed a little bit, so you saw the British pound lose a little puff, and now you're getting that bounce back up above our key level. So as far as holding longs go, I really don't have a problem with it. The biggest thing is just stop yourself out. If we come and make another leg down on NFP or something, that could be problematic. I would more than likely be looking for an exit ahead of that NFP release. Holding anything into that NFP report is going to be problematic. So Let's go ahead and talk NFP a little bit. To do that, let's cover the news of the day. Initial jobless claims are up, 231,000, up above 212, expected in 209 previous. That's a big deal because that's a weekly figure. Now, initial jobless claims, that's the number of people that are just showing up to that unemployment line for the first time. That gives us a barometer of whether unemployment is going up or down. It's going to tell us a little bit about whether job growth is positive or negative. Now, continuing jobless claims, you got to throw that number out essentially. Unless it's way off the mark, I wouldn't even look at it, to be honest with you. The reason why is it just isn't as accurate as initial. You want those first-time folks that show up for the jobs benefits, their unemployment insurance, the folks that have been doing this for a while, that have been on the rolls, that maybe haven't dropped off yet or maybe got extensions or whatever. We're not really too worried about them because theoretically, as the continuation grows and grows and grows, that means that we would have had a spike somewhere in the past. We want to know right now what's happening, and that's why you look at initial jobless claims. JOLTS job openings. I'm not a fan of JOLTS. I thought it was coming out Tuesday. They delayed it to today because everything is really in flux with our economic release schedule still from the government shutdown last year. JOLTS job openings up a little bit, 6.5. No, not up a little bit, excuse me, I misspoke. The last one was revised down, and this one's underneath that downward revision. So big picture, what does all that mean? It means that you don't have as many job openings. If you don't have as many job openings, it can be viewed a lot of different ways. If there's not as many job openings, you could say that the labor market's getting tighter, so not necessarily good news when you're coming in under that. The other thing you could say is if there's not as many job openings, you're working more towards maximum employment, which would be seen as a good thing for GDP. I'm not an economist. I don't care. What I do know is this. It's not the strongest jobs openings number. Typically, JOLTS jobs are interpreted as being when they're low. The idea is that job creation is not there. It should be new job openings if we were really interested in measuring something important. Job openings, what does that mean? If it goes down, it means people are probably staying put and there's not as many new jobs. You can read that any way you want. For me, I missed the number. I'm not real big on it. I don't think it's a 3-star economic event by any stretch. What is important is going to be U.S. non-farm payrolls. Now, the biggest thing to remember here is this comes out from the U.S. Bureau of Labor Statistics. This one's scheduled right here, employment situation, Friday, 6th February. I will have that live for you. We're going to come on about 10 minutes ahead of time. I'll have some key levels, and we'll have a couple of strategies we'll be trading live. But there you have it. That's going to be tomorrow morning, so be sure to join me. Well, morning my time, maybe afternoon or evening, wherever you may be in this world. But right there, Friday, February 6th, something like this. That's what we're doing. You'll notice that everything has been messed up. Everything has been messed up. So you're looking at something like this. So actually, look at this. This just got rescheduled since I started the live stream. Friday, February 6, 2026, previously scheduled release date. Look at, they bumped it to next Wednesday. They just did that this morning. Wow. Okay, well, we're living mi vida loca, huh? So they are going to have that next Wednesday. This is unbelievable. This is absolutely unbelievable. So next week, we were looking at CPI. Next Wednesday, February 11th, they're going to bump that to Friday. All right. Can you believe it? Well, I mean, we're still going to be live, I guess, tomorrow. I don't know when. I guess I'll go live at 6:20, right? I don't have a problem. I'll get up and do it early. We'll do some live trading tomorrow, talk a little bit about the day that was today, the week that was, and then we'll execute some strategy trades. That'll be pretty good. So be sure to tune in tomorrow morning, I guess, same time. It's already scheduled. It's on the books, but they just changed that. Unbelievable. Welcome to trading. Welcome to trading in 2026. Nothing's for sure. All right, guys, I got some stuff here. Let me see. Lebo, hi Shane. Haven't been here in a while. Happy to be back. Good to see you, Lebo. Welcome. May I ask, what is your favorite trading strategy? And I mean the strategy you trust with your life. I trust me with my life. My judgment. As far as a strategy, though, I need a winner. Macro Fibonacci retracements converging with key levels. That is lethal. That's a lethal strategy. The only problem is it's not really, like, I would never sit here and try to sell it to the masses because you don't get enough trades. You'll notice that every one of these trading strategies online that people try to sell, strategies, signals, all of it, you'll notice that they give you an absolute tremendous number of entry points and exit points. They want you trading every single day, all day, like a slot machine. It's casino mentality. I don't promote that. Trust my life. Chips are down. Lebo, chips are down, and I've got to make a trade. Chips are down, Shane. You got to make a trade. What do you lean on? Key level with a macro Fibonacci retracement. So if I was looking at a weekly retracement number that came right into play with a big round number, that's the one I want. And if I can get a 13-period EMA to line up with that, maybe on a couple different time frames, that's the one we go on. That's the one we go on. We're always looking for those. I call those great deals. It's just a matter of trade execution. You know, what can you really do to execute flawlessly in that situation? It's about getting filled. It's about being aggressive, having the money down, making it worth your time. I don't get that feeling at all off intraday charts. Too much volatility intraday. When you get those big macro levels and key levels, you can step up and scalp those and do very well. You just don't get enough of them, really, especially if you're a small retail trader. Very difficult to compound your returns when you don't have the trade setups. So you've got to be, you know, let's say we were looking at how many premium trades would we get like that in a year across all markets. That's hard to say. With a premium market, we'd probably get a shot at maybe 2 or 3 a month, 2 a month. I think 25 premium, absolute 5-star premium trades per market per year. That's what the big guys do. They just make sure on that when they get their premium trades, they walk away with a few $1 million. That's the difference. That's for sure. Let me see. Me, Shanghai is NFP tomorrow. Yeah, I was just reading that. There's your update right there. Take a look at that. Previously scheduled release date right there, Friday, February 6th. It is now Wednesday, February 11th. So I'm going to be getting up early, it looks like, for the next couple of weeks. That's fine. I don't care. I'm up and rolling anyways. So definitely check us out for NFP Live next Wednesday, or excuse me, next Wednesday. And then also next Friday is going to be CPI. So we're going to go Wednesday, Friday hard. Tomorrow, no economic news releases. Going to be a very quiet morning. I'll show at the same time, though. Not this time, but we'll go early tomorrow. We'll get in. We'll do some live trading and see if we can't make a few bucks going into the U.S. session. So, yeah, that was a surprise to me. They must have just changed it today. I looked at that earlier today, too, when I was building the stream idea out. All right, we're not going to cover NFP then, what we expect. As far as what can we say about the rest of the news cycle, not much. We've got a few other trade ideas that I want to cover. Let's go ahead and get XAU USD up there. Wrong button. Right here, you've got gold. Gold is in an interesting position. We sort of put this idea out yesterday, this 53.42-ish. I really love that area to get potential compression and then maybe a pullback off of that. We're just not there. We're down at about 4,800, so we're about 10% beneath that entry point, which is really a high-quality, high-potential entry point, but we're getting tremendous volatility per day. Now, one of the concepts that I talk a lot about is the concept of a swing. And what a swing is when you start looking for your highs to your lows. All right, in a day, your daily range, your swings. The swings in gold have been astounding. Take a look at this instrument. You can't really see the indicator, but it's your ADR. What an ADR is it's an average daily range. And I like to always know what my ADR is. I just put in a link of 13. I want a 13 average like my EMA. So I've got 13 in there, and what I'm looking for here is just essentially an idea of what the range could potentially be. Now I'm looking right there. I'm saying, okay, 268.50. That's yesterday's range. We're still working on today. So the 13-period the 13-period ADR, the average daily range on a 13-period coming into today's trade for gold was roughly $268.52. What's today's swing been? What's today's range? What's today's high to the low? Let's go ahead and do it without the averaging. Your high right there is going to be 5,023. What is your low? Your low today is going to be 4,789. So is our range in? We've got $234 in as range. We're looking for 268. So we could still make a little bit of a high or a low later this afternoon. It is possible. So I wouldn't necessarily rule out that we're done moving today in gold. What I would say is that we've fallen into rotation. No question. Be that as it may, the ranges are huge. The ranges are really big. Go back to this uptrend right here. Back on the 22nd of January, what was your ADR? It was 89. It was 89. So what your ADR is basically it's a weighted average of your daily ranges, average daily ranges. I mean, we're not reinventing the wheel here. And as we've seen more volatility come into the market, this ADR has grown. So what that can do is a couple of things. It can give us an opportunity to respect what's happening right now in the market, meaning more volatility. Is our daily range in? Are we going to make a new high or a new low today? It's possible to make a new low. That would be what we would say, because we're deep into negative territory. If we're going to push a low, if we're going to extend our daily range, it's probably going to be to the low. Personally, I don't necessarily believe that that's going to happen. I think we're done moving, especially going into this time of day, which is mid-U.S. session. Typically the COMEX gold is going to go off the board here. It won't go off the board, but the volume will dry up in about the next hour and a half. So I'm not really too enthused about the rest of the gold's trade today. As far as what could we be looking to do from key levels, well, you've got great resistance right there at 51.41, and then great up there at 53.42. So something like this, we can go ahead and knock the drawing off, and then let's go ahead and let's step back to our weekly. Are there any questions about this chart? It's not an inverted hammer. Why is it an inverted hammer? This down here, this lower wick's too long for my blood. It's not quite a hammer. Now, if we were down in here with our body, I'd say hammer. What do you got going here? Doji. What do those things mean? It means no one knows what's going on. Now, you see this formation a lot. Look what you got there. Look at these bodies. I mean, what do they have in common? Sometimes trading's really simple. Doesn't have to be hard. We make it hard. 5,000. 5,000. That was your high last week or 2 weeks ago, 49.90. Blew the top off of this thing, and now we're rotating near 5,000. This chart formation right here tells me that there's a tremendous number of sellers at 5,000. There's no question about it. Do we go back above 5,000? Not really in any hurry to do that, are we? Keep a close eye on gold. It's definitely in a rotational phase right around 5, but the ranges are huge, and that sort of tells us that maybe we're going somewhere. Maybe we're going to start a new compression phase, just like that last summer. Boom. We're inside of last month. I would be surprised. If we trade outside of January's range. I really would. However, if we do, we will be ready. We will be ready to buy on a discount. It really would not surprise me at all to see this market make another leg down and really put the screws to the retail longs. So that isn't an accident. I mean, it's perfect. Look at spike low right here. November of 2024's low. What happened in November of 2024? Presidential election. Market sold off. Interesting. Probably, you can see we had the build up to the election. Didn't surprise anybody that gold was on the bull. Pullback right there was what? The election was settled. The uncertainty, the political uncertainty here in the United States was gone. Compression, and then we broke out. Compression, broke out. Look at that. It's a perfect touch. What's your low right there? 44.02, 44.24. I mean, you've called that within $20 of a $1,000 move, $500 move. It's not bad. It's a pretty good margin for error, right? That's spot on. So 44.24, 44.25, big time support. Big time support. You're going to want to make sure that you've got your eyes on that support. As far as what we have cooking for later today, I've got really nothing for you. If you get a shot to sell up there at 5,000, probably be a pretty good scalp to the short, but that's a scalp. We're not taking a position from there. If we break above 5,000, odds are we're going to go up and check those highs out. The question is how long does this take us? Now, let's go down to a 30-minute chart today, and I'll see if I've got anything on the daily, but I'm not interested. I'm really not interested at all. I mean, this is just a killing field, and it's ugly. All right, so let's go ahead to U.S. session. So there's your opening bell, ding, ding. I like to start before that, right around there, 8:30 a.m., maybe even 8 a.m. Not necessarily the worst. Typically, you see volumes pick up in that area. Look at what you've got there. Flat line. So when was the move? Tokyo Open yesterday. Boom, boom. Rotated around. Let's go out to gold futures and see what's happening. Volume kicked up today. Pretty good volume right there in the cash open. Volume typically begins somewhere right in this area, anywhere from 90 minutes to 2 hours ahead of that cash open. But realistically, right there is typically what I shoot for. And you'll notice it's relatively steady every day. Boom, boom. That right there, it's got a lot of people's attention. That's what happened last night in Japan. Interesting. Very interesting. This right here is today's trading signature. So right there, I would be looking to start trade that zone, 8 a.m. Eastern, something like that. Your New York range is tight. It's very tight. How would you trade that? Not interested. It's too choppy in there. Theoretically, you could take a long or a short and just wait for price to rotate around, but look how slow it is. This is April gold futures. Look how slow that 30-minute chart. Price is not moving. Price is not moving. Let's stay out of that. That does not look good to me at all. Let's go to a 1 minute. There's your 1 minute chart. Nothing's happening. All right, everybody, I'm going to go ahead and sign off. It looks like I'm getting some messages coming in from a different direction, but gold is definitely flat. You can see we've got some lag. Platform's lagging. I've watched that. Here's your Great Britain pound USD. That's definitely looking like that bid. I like that bid. We'll see how that pans out. Today, silver bounced off of that key level right at 75. That's where the game is. It's at 75, and that's a big, big deal. That's a big, big deal. All right, since we've been talking, what's going on with Bitcoin? It's pushing lower. It's pushing lower. It's off $7,200 today, almost 10%. The real carnage, though, is developing. It's a developing story in the altcoins. Ethereum has fallen beneath 2,000. If you're interested in that type of situation, holy cats, you've got a real serious situation in Ether. Keep a close eye on last year's low, which is last January's low, somewhere down in there, 1,300. This is getting very, very ugly for Ethereum. There's no question about it. Let's go to a monthly for Ether. This is really ugly, really ugly. So this area right in here, that's going to be a yearly low from last April. Excuse me, I misspoke. Right there, boom. Keep a close eye on that zone if you're trading Ether. The rest of it, holy cats. I mean, where do we even begin? This is a key value area. Right in that zone. That's key. That's a key value area. Trouble for Ether. My pet rock, Shiba. Time to call my broker. Look where we're at. Fascinating. We're going to test the water beneath 5 for Shiba. You should get some bidders from there. Should get some bidders from 5. Altcoin, ugly for about the last 6 months, 7 months. There's no hurry to get into this market. You know, I imagine we're going to trade down around 5 for quite some time. But 12%, I mean, crypto getting destroyed, metals getting destroyed. I mean, it feels like the Empire Strikes Back. It's putting the screws to the little guy. That's for sure. All right, we've got a couple of announcements here, or a couple of questions here. All right, we'll go ahead and answer these. We'll have to save the psychology talk for tomorrow. We'll cover that tomorrow. I'll talk a little bit about psychology and having your head on straight when you're dealing with your money and your finances. It's very important. All right, Lebo gang. You'll see, have you ever had any problems or issue with prop firms where they refuse to pay you out even though you followed all the rules and fulfilled all the terms and conditions and passed the challenges? Not really. Not really. My biggest problem is that trailing drawdown. I think the trailing drawdown rules are garbage. I don't like those where they judge your account by the high water mark. That's not how trading works. Trading ebbs and flows. You're not always moving in a 45-degree angle. And what they do is most of them are running on demo funds, and they set a video game up where the rules are really designed to work against you. And I play for money. I don't have time to sit around and worry about somebody's rules. So if the rules consistently are preventing you from getting a payout, there's a lot of prop firms out there. Find another prop firm with better rules. And the other thing is this. I understand a lot of folks love to trade prop because they give you the money and you don't have to worry about, coming up with your own finances. And believe me, I get it. I did a stint back in the old days with one of the biggest prop firms in the game right now. And this was in the old days, 2013. I think I did 2 or 3 different runs with them, and it never became financially lucrative for me. It never did. The reason why was I really didn't have enough money to make a horse race out of it. And I also wasn't really that great of a trader at that point. I had a lot to learn. But the people that I dealt with back in the day were pretty good people. And we were trading real money. And they were hard, but that's because there was real money at stake. And so it was very different than it is now, where they just give you an account and have you go trade it. And if you nail it, you nail it. For me, it was you logged into a trading room every day. They talked to you. They reached out and they talked to you, and they said, because my screen name was Vern, and it was like, okay, Vern, you've got a 5 lot on. What are you thinking here? And I'm thinking, well, I'm following my strategy. I'm going to go ahead and trade. And they say, this market's dead. You can't take that leverage. And they would pull my trades off at the server. So imagine the prop firm at that point had, because we were trading real money, and all these accounts had all these different orders in front of them. And when they saw a position or a leverage position that they didn't like, they would just pull it off, and they'd say, no, we're not going to let you take that trade. And that happened to me a couple times. And the second time that it happened to me, of course, the trade went up and got its money. And that was basically the end of my career prop trading, seriously. I have some prop accounts, but I don't take them very seriously. My cash accounts are where my focus is. Now, the problem with pulling somebody's orders off the board was that it's none of your damn business how I'm trading the money. I passed all of your rules. I'm adhering within the risk management parameters put forth by your firm, and you're still going to step in and take my contracts off the board. I mean, as far as I'm concerned, that was the end of our relationship. I mean, that was the end of it. And so I've really haven't got back into prop to the point where, okay, this is how I'm going to make my living. But I can hear you. I've heard a lot of horror stories about that, Lebo. People going to get payouts and not being paid out. I think it's becoming more and more rare just because the industry is so hyper competitive. They really do try to service the client now. But talk with the other traders. Check out some reviews online. Read some Trustpilot reviews. Let me see. Ralph H. Static drawdowns are better. I would never consider doing one without a static drawdown. And unfortunately, they charge you a lot more money for those. So I'm like, might as well just trade the cash. That's for sure. Let me see. Gordon Williams, what market can you trade with $500? I trade any of them with $500. It just depends on the kind of trading you're doing. It's all about leverage, Gordon. So if you were going to trade $500, you could trade futures if you wanted. You could trade micro future contracts, which are small, $1 a pip, 75 cents a pip, 50 cents a pip. You could open a Forex account, take that leverage way down, and just trade micros or minis. Nothing wrong with that. You could do it. It could be done. I highly recommend that. People getting in and understanding what real money is all about. Even if it is, it's funny, Gordon, back in the day, $500 was, it's still kind of a little bit of money, but, $500 now it's just lost so much of its value, But yeah, you could trade Forex. If you were going to get in the futures markets, if you're in the United States, you would be trading micro contracts, which is just a real small tick size, but that's great to figure out how you do it. Let me see. Yes, sir. I'm going to need gold to keep going lower. Tokyo session was moving, just didn't get where I needed it to go, man. If you're holding shorts from Tokyo, you are hitting home runs, yes, sir. You are hitting home runs, that's for sure. You had to have caught damn near all this move, 2%, so you must be looking for a 3 or 4% sell-off. That's cool. I like it. I've made, let's see, today I've made two trades. I took a counter trend range trade in gold, or not gold, excuse me. I took a counter trend range trade in WTI futures that cashed in, but I cut it off really quick because it was such a counter trend trade. But since we've bounced, pretty much called the bottom of that thing. And then I took a moving average trade in Euro FX futures that was a good winner. So it's been a pretty good day. Kind of quiet for me though. I was looking to make maybe 4 or 5 trades today and only got 2. This week, sort of steering away from the metals. I'm planning on diving into the metals probably next week. It won't be tomorrow. Tomorrow's No Donation Friday. We're going to take some money. We're going to get paid. We're going to get paid. We're going to put in the ACH transfer when I get off this stream, and then we're going to go from there. All right, everybody. It's been a good session. My apologies on the NFP confusion. They changed it. We were locked and loaded for tomorrow NFP Live, but I'm going to show up at that NFP Live time slot, so it's going to be significantly earlier tomorrow. If you have any questions at all, be sure to reach out on me on the live chat. If you have any markets you'd like me to look at, I know we just sort of covered some crypto and some metals, nothing really with the indices or things, but we'll pull up a strategy tomorrow and see if we can get involved in there and make a few trades and stack a few pips. All right, everybody. Interesting times. We're seeing incredible volatility. Really blowing me away. I didn't even talk about the VIX. At one point, the VIX was up 20% today. That's incredible panic in the S&P 500, at least with regards to front month options premiums. Who knows? All right, you're absolutely welcome, Ralph. You guys have a fantastic trading session. We'll be back bright and early tomorrow with live coverage. It's going to be fun. The markets will be active. We'll see if we can maybe make a few trades before that U.S. Open comes our way. All right, everybody, have a great session. Trade the action well, and we'll talk soon. See ya.